guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of February 12th, 2024. We're going to touch on where we are in the S&P 500 year to date and what it looks like moving forward. We're going to talk about the different sectors and their performance, as well as how they look going forward. And then we're going to discuss some of the economic data that's coming out and then jump into the option trades on the option trading platform. I think it's important that we understand all the different strategies that the rich are using to get richer. Then we can use those same tools and strategies to profit for ourselves safely in any market. Before we get started, if you appreciate the time and effort that goes into making these videos, if you can please hit that like and subscribe button. It really helps to get the video out to more people. I appreciate it, so thank you very much. Also, be sure and download that free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. And disclaimer, I'm not a financial planner. Please do your own research, and if you're new or learning options, I do recommend you start small. All right, guys, let's look at where we are in the S&P 500. Year to date, we are up. We started the year at 47.43, and we're up about 5% year to date. So the forward PE is now 20.3, above the average of 17.7, the 10-year average. If we look just at last week, we were up slightly, very slightly last week. As far as the economic calendar, there was really no big news last week. This week, we have core PPI coming out Friday and core CPI coming out Tuesday. 0.3% is expected, 2.9% year over year compared to 3.4% last year. So these numbers are going to tell us how inflation is being curbed and doing. I think as far as rate cuts for the Fed, there's a 52% chance of a cut in May. The Fed is still talking about rates higher for longer, so we may be looking at June, but I think there's a big chance that there'll be a rate cut by June. And then if we go to FactSet report, we look at earnings for Q4, 2.9% growth rate. There's that 20.3% PE. If we move down to look at next year, or for this year, calendar year 2024 is at 10.9% earnings growth, 5.4% revenue growth. That's revised down like 0.2% from last week. Q1 is projected at 4% earnings growth and 3.6% revenue growth. And then if we move and we look at the PEs, we're still looking at energy being undervalued, and I'm long energy, Exxon Mobil, and crude oil. Even we just made some money on. Utilities are still down, and then those are the two main ones. If we looked at the different sectors for last week, everything was up. Consumer staples were down, and utilities were down. Even communications. So that's with, Google. Disney had some good earnings that came out. Netflix, Meta. I'm short Meta, but for the first time in a while, communication was down. Year to date, real estate, materials, and utilities are all down. Everything else is up. One thing I wanted to point out is this fear and greed index. This really shows that that we're high. So a lot of people are jumping on the bandwagon, investing in the market. So we want to be careful going forward. I actually closed out some positions, and I'm looking for a drop in the market in the next 2 to 3 weeks. We'll jump into the trades now on the platform. crude, we're up $100 on one put spread. I closed one out and profited last week. Had two on, but we moved up to 76 from 72 on crude oil. Here's the RSI. These are the new charts I'm using. I'm looking at the RSI. So if we're in the 70, we're overbought. If we're down at 30 range, it's undervalued, oversold. So we want to buy below that 50% line if possible. And then these are the Bollinger Bands. And then the green line is the 13-day moving average, and the yellow is the 50. So when that green crosses, the 13 crosses the 50, that shows that we're trending bullish. So these are some charts that I'm going to use going forward, I think, a little bit more. But crude, definitely long. I'm going to wait until it drops down to 60 or 70 and then, be long again. If it gets up to that 90 range, then I'll be short. Airbnb actually has earnings coming out. Go over here to positions and sort alphabetically. Yeah, you can see on February 13th, after the closing bell, there's earnings coming out on Airbnb. I think Airbnb is a great stock going forward. It's not just owning real estate and being in real estate, but it's not passive like real estate. My target's 160, 170. It's at 147 right now, so I'm long a put spread right after earnings. If it does drop, I'll probably buy more. They do have expectations of growing fourth quarter about 13% and about 8.07 billion, 8.07 per share profitability. It's priced at 18 times forward PE, so less than the S&P of the 20. So I think Airbnb is still a great buy. And if we look at that chart, it is trending up. The green's above the yellow, so the 13's above the 20. 13's above the 50. And it's not at the top. So still a decent buy. But we've got that earnings pop that's coming. Adobe, I'm long up to 60-80 target. We've got the $10 wide 600 put spread. I think we've done well in Adobe. We've got some extrinsic $300, 305 that we can collect in the next 34 days, as long as we stay under that 600 line. It is trending up. Adobe. AMD 172. I'm long. I've got two credit spreads. We're up 232. We've got 698 left to collect. My target for AMD, it did move up. It's 172. It moved down last week from 177. There was a slight pullback, but we're still above our profit zone. If you look there, we're here. This is all profit, max profit, above 165. And AMD, just $500 in just the last 30 days that we've made. So AMD has been good to us. Big in AI. AI is the big trend right now that NVIDIA is going out of this world right now. Chewy, I'm long. I closed out my call. It had a drop down to 17, so I am long Chewy. It is trending down, but I don't think it can go much further down. So I'm going to stay long Chewy. If it does move up, I'll throw on a call spread at the same time. My target for Chewy is 30, so quite a bit higher. But people love their pets, and we just, we made $100 in the last 30 days, even with the stock moving against us down. Amazon's one. Amazon and Apple I wanted to touch on. I closed out both of these. The low IVR, 174. We already profited in Amazon. we haven't traded a lot this year, but only $71, but it moved up quite a bit. Made a couple $100. And then Apple. And again, this is part of my closing out. I think there's going to be a correction coming at 10 or 15%. Come on, Apple. Isn't that it? APPO? Am I going crazy? AAPL. What am I doing? AAPL. There we go. But yeah, it's at 188 from 185. We closed out for a small winner, but I'm going to wait until it drops and then get back into Apple as well. Where are we at? Google. Love Google. It's went up to 149. You can see we're up in this trade. I believe I had a couple put spreads on in Google. If we look at the last 6 months, we made $458, so not too bad. But I'm selling a $15 wide 145 130 put credit spread. As long as we stay up above that 145, we keep, there's $180 left in extrinsic to collect over the next 34 days. Any drop below this range, I'll throw on another put spread. Intuitive Surgical, that was an earnings play that we played. It's not super liquid. I don't really like to trade this, but we're in between that range. I did move up. It's getting close to testing the short call, but again, we're at the top end of that Bollinger Band showing overbought. So I don't think it's going to move up on top of RSI. I think there's a better chance that it's going to move down, even though it is trending up the 13 days above the 50-day moving average. But I'm going to hang on, see how it hangs in there, close it out. But I'm hoping for a little bit of a pullback to the middle of this range. But we're still max profit right now because we're below that 395. So we'll see how that goes next week. IWM, the Russell, we've got two put credit spreads. So we are hoping for, it stays above that short strike. I think the 196, yeah. $3 wide. We collected a couple $100. We've made 100. We've got another 141 left to go. L3 Communications. It's been trending up. 209. We're along the 210 put spread. We've got $372 left to collect. Lulu, 450 put credit spread. This is, I didn't want to spend the money to close it out. It's at 520. When I tried to close it out, it's not liquid, so I'm just letting it expire. But we want to stay above that 450 mark in Lulu. We're in pretty good shape there. And we've done pretty well. Actually, let's go back to L3 and see how we've done. I'm curious over the last 6 months, we've made over $800 in L3. I think Lulu has been pretty good to us as well. The last 6 months, we $827. So just trading iron condors. Lulu's not super liquid, but I think I did a trade around earnings and we've stuck with it, and it's doing well. Meta, I'm short. It had that big parabolic move up. You can see way above the RSI trending up. I'm waiting for a pullback, but I've just got two call credit spreads above where where it's trading today at 480. I'm hoping for a continued pullback in Meta. I seriously am not coughing until I get on this video call, and then I start coughing. I'm at the tail end of this cough, but it seems to be getting worse as I get on this video call. But we've made $520 in the last 6 months. Yeah, I apologize for the cough. Next week, I promise I'm not going to have it. Netflix between 530 and 620, right in the middle of the range. We've done pretty well, I believe, in Netflix. Over the last year, yeah, we made over $3,000 just trading iron condors in Netflix. And we're still right in the middle of that range. I just closed out of February, and now we're in March. And the chart, it is trending up, top end of the range. So I think we're going to be in good shape to collect this extra $266 on this iron condor, where we're already up $99. SOFI, we've continued to do well. Actually, let's go to a couple that I closed out, and I'll show you why. But ServiceNow, we were up, and then I kind of hung on. Probably should have closed that one out, but it came to the top end of the range. So we still made in 30 days $114. But that was one trade that we did and closed out. Palantir was the other one. We did some videos on this. You know, I like Palantir, AI software play, defense and commercial markets. We did well. I closed out my leaps options, my deep in the money calls, deep in the money calls, and then shorter term calls sold against them. However, then I tried to get fancy with the big parabolic move up. I was thinking it was going to drop down, so I bought some puts, and it cost me some money. You can see right here, a couple $100, but still up 180 in 30 days and 688 in 180 days. So we're doing okay. I'm going to wait for a move back down to closer to that 50-day moving average. Wait for the RSI to come down, and then go long again in Palantir, probably deep in the money calls. But again, we're having that pullback, I believe, in 2 to 3 weeks. That's my guess. I mean, this is for entertainment purposes. You guys tell me what you think in the comments below. But I think we've been up, run up too far, too fast. SOFI dropped back down to the 8. I'm long some deep in the money calls, and we're up in SOFI $732 over the last year. But looking for another big run up. Any down move, I'll buy more deep in the money calls, and I'll go. Other than these, these are inside a year now. So any up move, I'll sell these. Any down move, I'll buy 2 years out, because I want to do it for the long term. The difference between 1 and 2 years is not that much difference in cost. So I would rather not have the theta decay, the time decay. So I'd rather go further out and pay a little bit more. SQQQ, that does well as the market goes down. It's the ultra short Qs. So as the Qs move up, SQQQ goes down, and likewise, if there's a big drop in the NASDAQ or technology, which is up huge this year and over the last year, then this will do well. At the same point, this goes back to that fear and greed index. I'm playing TLT and TMF. I've got some pending orders in, good till canceled. I'm going to go a year out in these. Spend $1,000 per contract roughly, and I'm going to buy 4 of them next week. So typically 90 days before the Fed cuts rates is the time to buy bonds, so long bonds, TLT and TMF, and they have been down over the last year. So I'm going to play those. And when the market does, if there is a drop, these should do should do really well and move up. So let me know if you're doing anything similar to this. If you're taking some off the table in technology and communications and looking for a drop in the market, or if you think it's just going to keep screaming higher. Verizon's another one. So I'm looking to buy some of that. It's got a huge dividend, 6%. I've been up, but now it's back to that $39 range. And you can see it dropped down. It hit the yellow is the 50-day, the green is the 13-day moving average. It's hit that yellow 50-day moving average. That's the time I like to buy. And we came right down right here on the RSI. So I'm going to buy another 100 shares next week. I've just got that order in below the market so that I can buy that on Monday morning if it's down. Wells Fargo is another one, $48. It's moved down, so I sold my call that I had against my deep in the money call. I had a poor man's covered call. I like to have Wells on just to watch the financials. I think the new CEO should do well. He's got a good history, and Wells Fargo's been down, and I think it's one of the banks that's poised to do well when the economy turns around, but probably not till the second half of the year. But ExxonMobil, we've got 3 lots on. We're down to that, close to that $100 range. We're a max profit as long as we stay above 100, and we're right at the 50-day moving average. It's a good buy right now. So that is it for the trades. And then we've got earnings, quite a few earnings plays. If we go here, all earnings, we can sort out alphabetically. We can see some of the earnings plays that we have on next week. I think we've got Coke, Datadog. Here's Coke, the 13th before the bell. Datadog, same. So that's Tuesday morning. You want to put that on Monday night if you're going to place an earnings trade. Airbnb is next week. We've got Robinhood, Upstart, MGM. We've got a lot of earnings next week. We've got Lyft and Cisco, I believe. Oxy, Applied Materials. There's Cisco. We've got Twilio. And I think they're the ones that send the clothes to your home. And you try them on. If you like them, you keep them and buy them. If not, you send them back. I don't know how that's going to work. We've got DraftKings, Roku, Coin, Toast, and Dollar Tree as well next week. So a lot of earnings, and look forward to seeing how those are going to be doing. All right, guys, I put a link down below for that free options workshop. Be sure and grab that. Remember to hit like and subscribe. Leave a comment, ask a question. Let me know what you're trading. I answer everyone. And thanks for watching. I'll see you in the next one.